Nice to see you. I observed in our last class, you probably had network issues and you were not constant during the class. I hope your day went well. So I just want to plead with you. You should kindly wait for about 3 minutes for other students to join us, then we get started. Exactly 7:15 on the dot, the class will commence. Thank you. Okay, good evening once again. So let's get started. In our previous class for last week concerning taxation, we talked about partnership, okay, partnership accounts, partnership income generally, and it was also discussed in the previous class. Okay, we talked about partnership, the necessary, other than the theory aspects, we also looked at calculations. If in the exam scenario, we are given questions relating to partnership accounts, and we are asked to calculate the tax payable by each partners in an existing business, how are we expected to calculate it? So we looked at 3 different questions there. 3 different questions. I guess you must have seen the material. We looked at the 3 different questions and tried to explain how each of them are expected to be answered, okay, in the examination hall. So for today, we'll be looking at 3 different topics. Well, first and foremost, I want to talk briefly about our taxation exams. For taxation exams, in your new syllabus, okay? You usually have first section, which is called the multi-choice section, which comprises of 20 questions. And those 20 questions are objective questions, where you have options from letters from A to about E, and you're expected to attempt all. So the reason why I'm bringing this up is because for taxation, many students just get to focus on the theory parts and do not take their time to also read. Sorry, they focus on the calculation part and do not take their time to read the theory aspect of taxation. But these two work hand in hand, okay? Before you know the calculations, aside that, there are other topics that do not really have calculation aspect of it, but it's important for you to know them because this affects the general Nigeria tax laws, okay, and tax policies that are being implemented in Nigeria today, okay. So it's also important for you to know them. And for your multi-choice questions, basically, most of the questions you will be asked in the multi-choice questions, in the objective questions, they will mainly focus on the theory aspects. It may not be totally, okay? You may have few calculation questions, but they will basically focus on the theory part of the syllabus. So that's an opportunity for you to have 20/20, to be honest. If you can successfully attempt all the questions correctly, that's already a free 20 marks questions. Then from the section B, you can easily get your other section B is already 80 marks, sorry. So you can easily get your other score in addition to 20 and pass the cutoff mark, which is 50 and above. So please, I want to plead with you, okay, that while we take these theory topics, you should also listen up and try to understand. So as you can just get a notepad and a pen with you, okay, we have some series of questions to look at, but I'll also do a brief explanation of the topic before we look at the questions. All right. So briefly, let's just look at the class rules, which I know you're already familiar with. So for the class rules, all students are expected to be on audio and to be muted both on audio and video to avoid distractions. So if at any point in time you observe that your audio is on, kindly turn it off first to avoid distractions on my part and on the part of other students. Then students are allowed to use the chat buttons to ask questions. So during the course of the class, if you do not understand any part that is being explained, kindly go to the chat button and send your questions. I will attend to it as soon as possible. All right. The students are expected to be cordial and professional when using the chat buttons. Ensure you use professional language. Okay, thank you very much. The students are advised to listen attentively during the lectures rather than writing. So just have a notepad. Any important point, you can kindly note it along while the class is ongoing. All questions will be attended to after lectures, or you can also ask them during the class, okay? Then feel free to call me or chat with me. Once again, my name is Adesua. For those that are just joining us for the first time or being in my class for the first time. So my name is Adesua, and I can quickly call my phone number 081 866 53263. So you can reach me at any time when you're going through your materials, you don't understand any part, I can always put you through. If you're attempting other questions other than the ones you've done so far in the class, you can also call me and I can explain as soon as possible. So let's get started. For our class today, by God's grace, hopefully, we have 3 topics here actually, but I do not intend to rush them. I intend to take them as easy as possible for you to actually assimilate and understand all we have to do today. So first and foremost, we'll be looking at basic ethical issues in taxation, okay? Then secondly, we'll be looking at national tax policy, NTP. Okay, these topics were recently introduced into the taxation syllabus beginning from November 2019 diet, okay? So we have these 2 topics to look at. These 3 topics, basic ethical issues in taxation. national tax policies, and we also look at returns, assessment, and collection procedures. All right. So let's get started with the first one, basic ethical issues in taxation. So generally for taxation, okay, we have what we call the IASB. Okay, this is a body, okay, it simply means International Ethics Standard Board for Accountants. It's a body, and the objective of the body actually is to, their main objective is what? Is to bring about ethical principles to guide accountants, and only accountants. This also covers what? Internal auditors and their independence. Okay, so this body came together and formed what? Basic fundamental principles that every accountant should know and every accountant should adhere to. Very, very important. So these basic issues do not only cut across taxation. In order, by the time you get to skills level, you'll be more familiar with them. So when they say ethics generally, these principles are basic fundamental principles. In your audits, in other courses, okay, they are also what? They are also present. So it's expected as an accountant, you should not only know these principles, but you should be able to what? Apply them in your day-to-day activities, okay? So what are the 5 fundamental principles of ethics? One, which is the first we'll look at here, is what? Integrity. When we say integrity, what comes to our mind first? Okay, integrity simply means when you say someone has integrity, it means the person is straightforward, the person is honest. Okay, so here in taxation, as a tax practitioner, as an accountant, please, like I mentioned before, these basic principles. Sorry. My host, kindly confirm you can hear me, sir.
Yes, we can hear you clearly.
Okay, thank you very much, sir.
Right.
Sorry, I thought I was just talking to myself. Okay, so the first principle here, ethics, we have here is what? Is integrity. So I've already outlined that. Okay, when we say integrity, we mean that when we say Temitope has integrity, you are trying to say Temitope is straightforward and she's honest. Okay, but in relating to a tax practitioner or an auditor or an accountant in this case, what is expected of you? Okay, to have integrity. A professional accountant is expected to comply with the principle of integrity that has been stated already. And as a professional accountant, you're expected to be straightforward and honest in all professional and business relationship. All professional and business relationship. As a tax practitioner, okay, you're a professional, you are specialized in dealing with tax matters, tax related issues, okay, with your clients. So as a tax practitioner, okay, you have business relationships with your clients. And this business relationship are expected to be professional, because you are bringing your profession into play while carrying out any projects, okay, or carrying out any duty or any responsibility, anything you're carrying out on behalf of that client, okay, your professionalism will play a role there. So as an accountant, you're expected to be straightforward. All professional dealings, even an accountant working in a company, in all your dealings, while carrying out your regular day-to-day activities, carrying out your responsibilities in the organization, you're expected to be straightforward and honest. So that's what integrity is talking about here. And it's when you say honest and straightforward in all your dealings, you should be truthful, you should be fair, you should be honest. So a professional accountant shall not knowingly be associated with reports, okay? Yeah, what it means is that, as an accountant or as a tax practitioners, you are more expected to carry out reports, right? As an accountant, reporting your organization, or as a tax practitioner, you file returns on behalf of the company X and Z Limited. Okay, any of these activities, any of these responsibilities you're expected to do, okay, you must ensure that any information that relates to these duties are what you do not come in contact, you do not expose yourself, okay, or you do not excuse me, you do not give out any information that is false. For instance, let me just cite an example. As a tax practitioner, you are a tax consultant to Temitope Limited, okay? And Temitope Limited has requested for my service to come and complete the tax computation for 2018 year of assessment. On getting to Temitope's company, after computing the tax, I shows her the calculation and then tell her that the company income tax due for that year is 520,000 naira. Okay, the education tax is what? Is 100,000 naira. While looking at that information, Temitope will now tell me that, oh, as a tax consultant, please, I'm unable to pay this company income tax and education tax you have finally arrived at after looking at my record available. So kindly help me reduce this tax liability. So I paid probably she will tell me, okay, I can pay only 120,000 naira. I, on my part, as a tax consultant, if I go ahead to falsify the information based on her account, if I'm to reduce her tax liability to 120,000 naira, for me to state that, it means I'm going to be understating some items in the financial statement. I believe you understand. I'm understating some, or I'm also overstating other items, probably in the statement of financial position. Even starting from the revenue, which is the first, I'm going to be understating the revenue of the. If I'm not understating it, is either I'm increasing the expenses and every liabilities and every other things that will be involved. So as a professional accountant or as a tax practitioner, you are not expected to be involved in any information that is materially false, any information that is misleading, that do not show the true position of the company you are working with, the information of the organization, individual you are working with. So let's move to the next one, objectivity. As a professional accountant, you're expected to comply with the principles of objectivity. And objectivity, what it requires is that it requires an accountant not to compromise professional and business judgment. Okay, as a professional accountant, okay, you're expected not to be biased. You should not be biased. You should not get involved in conflict of interest. And then even if conflict of interest exists, okay, while carrying out your duties and your responsibilities, you should not also allow undue influence of others to affect your judgment, your reports, or your decisions. Okay? Objectivity. Integrity, straightforward, honest. Objectivity, an accountant should not be biased. Conflict of interest, an accountant should not be conflict of interest should not exist, and even if it exists, you should ensure that you are not your judgment or your report, whatever information you are giving to your client at the end of the day, should not involve their influence, should not make you give the wrong report or a false report, a report that is not true, that does not show the true state of the entity, the true position of that entity during the period of audit, or during the period of the accounts you actually computed taxation from. So when you say you should not be biased, you should not. This also relates to the previous example I've given. Okay, if I am easily influenced, okay, or I'm easily influenced by Temitope Limited, okay, and I go ahead to reduce our tax liability to 120,000 naira, fine. Even if for that year, she's able to actually pay the tax liability and tax authorities are not aware, she may not be caught that current year. But one thing with tax authorities, the year they get to find out. In fact, these days, most of their systems are actually they are electronic and they are computerized. So what they even do, when you go to submit your audited financial statement in tax office, they can easily assess if the revenue you're giving for the company within that period, okay, they can easily assess if it's understated. For instance, Temitope Limited, what they do, because they have the BVN of the company, they can easily do their own calculation and say, no, if Temitope Limited, her account submitted was showing 100 million as the revenue for the year, but on their part, they would have calculated 500 million. So what they will do, by the time they see the discrepancies, they will write a letter to the company through the tax consultant, informing that there's a big difference between the revenue they think this company have earned within that period of time. Unlike before, tax authorities are not able to ascertain this. So you should know because at the long run, if they get to find out, there will be penalties to be paid for that period for those periods that the company did not pay the actual tax that was due to government. So let's continue. The third responsibility, third fundamental principle is professional competence and due care. So a professional accountant is expected to comply with the principle of professional competence and due care. Okay, what it means is that an accountant should attain and maintain professional knowledge and skill at the level required to ensure that a client or employee organization receives competent professional service based on current technical and professional standards and relevant legislation. So what it means is that as a professional, you should be competent in your profession. You're an accountant. In carrying out your responsibilities, if you are being employed as an accountant in an organization, in carrying out your responsibilities, you're expected to be updated with all the necessary information needed to carry out your activities. For instance, I'm the accountant of my organization. I'm expected to prepare bank reconciliation statements. I'm expected on a monthly basis. I'm expected to prepare the statements of profit or loss on a monthly basis. So what it means is that I should be able to do the necessary things. I should be able to post my ledgers. I should be able to carry out my other responsibilities, my vouching. So what it means is that you should be specialized in this area so that you can effectively contribute to that organization you are being employed in. And if you're an accountant, probably you do not have the experience at the beginning. There's room for you to learn. Okay, like we have ACAs and we have FCAs. When you're already a qualified chartered accountant, okay, you become an ACA. And then if you practice for 5 years in probably an audit organization, you can easily get your FCAs. So for FCAs, like those that were chartered about 10 years ago, trust me, if they do not stay up to date with the current accounting standards and they are working in organizations where they need to apply this IFRS and so on and so forth, they will not be able to contribute effectively or even carry out their roles correctly. Do you understand? So what it means is that as an accountant, part of the ethical principles is that you ensure that you are up to date, you gain knowledge. All the standards I need to know, IFRS concerning revenue, IFRS 5, IS 16, and so on and so forth. I need all of that to prepare the financial statement of my organization during the course of the year. That's why we have Google. Ask. In fact, that's why you also have SCA, experienced lecturers here, okay, that you can always ask if you have questions, if you have issues or challenges you're experiencing in your organization. So the fourth is confidentiality. As an accountant, as a professional one, you're expected to be confidential. Okay, when we say confidentiality, okay, what it means is that an accountant is expected to respect the confidentiality of the information acquired during the course of its duties or during the course of carrying out work for its respective clients. Okay, like the example I cited before, Adesua and co-chartered accountant, who is a tax consultant and also involved in audit practice. Okay, remember I told you Temitope Limited Temitope Limited is a business. Let's say she's involved she's in the oil and gas industry. All right. So while going to Temitope's office to look into the books, their records, okay, and then I finally compute the tax for the organization for 2018 year of assessment. Remember, while carrying all of those activities, while performing my duties, okay, I've already exposed myself to the information of Temitope Limited. I can easily tell you how much income comes into that company on a monthly basis. I can also itemize the kind of expenses that she's exposed to, okay, in terms of oil and gas industry, okay. Other than that, I've looked into their bank statements, their accounts. I already have an idea if she has loan with other company, with banks and so on and so forth. So these informations that I've gotten as a result of going through Temitope's Limited organization, I'm expected to be confidential with those information. Do not give those informations out to third parties. So that's what is expected. So as an accountant, let's read what it says here. As an accountant, you're expected to be allowed to the possibility of inadvertent disclosure, okay? The possibility of disclosing any information. So in our social environment, for instance, by the time you go out, you should not give out any information to anybody, irrespective of the environment you are in, especially to close business associates. As the accountant of the company, no, you are not there to give out any confidential information to the staff of the company. Even if you have staffs of the company that are like your close friends, let's say after work, you take them home, you still are not expected to give them any confidential information that relates to probably the financial information about the organization, because as the accountant, you know more than other staffs. So you should not disclose such information, or even to close family members, okay? Then you're expected to maintain confidentiality of information within the firm or employing organization. For instance, okay, Olabisi, okay, let me use Olabisi now. For instance, Olabisi was working in ABC Limited, and Olabisi leaves that place and probably gets a job in Dangote. Okay, while leaving there and going to Dangote, that's already another company. So here, Olabisi is working another company, already worked in ABC Limited. Even while Olabisi is working in Dangote, you are not expected to give confidential information to another employing organization, or because you already know you already know almost everything about your previous company. You're not expected to also give out such confidential information, because that Dangote Limited is already a third party outside your previous organization. Then thirdly, you're expected to maintain confidentiality of information disclosed by prospective clients or employing organization, okay? Not use confidential information acquired as a result of professional and business relationship for personal advantage. Probably I've gone to Temitope Limited to go through an account, and I know that this company is doing well. No, let's even say it's not limited. Temitope, okay, company has shares in the stock markets. Because I already see how the company is doing well, I have access to their information. I will not decide to disguise myself and go and buy shares in the company. And at the same time, I'm also auditing that company year in, year out. Because of the information I've exposed myself to, I'm not trying to use that information to my personal advantage. Because I know that by the time I buy shares in that company, over time, I'll be able to see the dividends, because I know that the company is currently doing well, okay? So that in that case, you're using the information generated for your personal advantage as an accountant. You're not expected to do that. So confidentiality. For confidentiality, there are circumstances where a professional accountant might be required to disclose confidential information. There may be cases, they are very easy. Let me itemize the one. Disclosure by law. It is required by law for an accountant, tax practitioner, auditor. They all fall under this canopy. They are expected if they are asked to disclose information and is required by law. For example, we have production of documents or other provision of evidence in the course of legal proceeding. Okay, the case has gotten to court, and you need to what, provide some documents as evidence during the legal proceedings. In that case, you are allowed to disclose confidential information. Secondly, disclosure to the appropriate public authorities of infringement of the law that comes to light. So probably there's already a law that has not been abided to, and you're expected to what, give out confidential information about the what, organization. Then we also have if the disclosure is permitted by law and is authorized by the client or the employee organization. So the client you are working for is what, giving you the go ahead to release information to the whatever authority has what, requested for the information. For instance, you are the accountant of your company, okay, and you get a letter from EFCC, for instance, requesting some certain things. That will definitely be discussed with the board of directors of the company, or if it's a one-man business, to the managing director of the company, okay, and that person will give you the go ahead to draft the necessary response needed to reply the authority. Okay, in that case, you are permitted by the client or the employee organization. Then lastly, it is a professional duty or right to disclose when not prohibited by law. Then lastly, what is the last fundamental principle, is professional behavior. As a professional accountant, how are you expected to behave? Please let me say this here. When we say professional accountant, I'm not only referring to those that are chartered. You're a student, as long as you're an ICANN student, okay, you're already a professional accountant in the making. So these same principles are applicable to you, these same fundamental principles. So number 5, you say a professional accountant shall comply with the principle of professional behavior. What it requires is that the accountant should comply with the relevant laws and regulation and avoid any conduct that the accountant knows. Excuse me. Okay. So it says a professional accountant shall not knowingly, the accountant is expected to comply with all relevant laws and regulations. These are the laws, for instance. They say as an accountant, you should have integrity. As an accountant, you should be confidential. These are already laws, principles, ethics you should abide to. So as an accountant, you should comply with relevant laws, regulations, avoid any misconduct that will bring discredit, any misconduct, that will bring discredit to the world, to the professional institute. For instance, as a chartered accountant, if you are exposed to any of this, if for instance you, as a professional accountant, you carry out we've heard about audit firms, right? Even some of all these firms, like audit firms where they do not carry out their responsibilities, or probably they would have given a report that the financial statement of a particular company for a period of time gives a true and fair view of the company, but indirectly it doesn't show the true position of that company. If at the end of the day, the tax authority or the whoever it's using is depending on that information provided by the auditor, he discovers that the information is false, what will he do? There are so many threats that individual is responsible. There are so many things that the audit firm will be exposed to. A lot of risks, reputation risks. It will bring down the name of the audit firm. By the time others other individuals will not be able to give their audit work to that audit firm. Okay, so there are so many risks that individual, as a professional accountant, you can be exposed to. So anything that will bring discredit to your profession, because they see chartered accountants as those that have solutions for their financial solutions to their financials in organizations. So anything that will bring discredit, please, you're not expected to associate with them. We would have heard in the news of some banks where they would have arrested probably a worker of the bank who would have stolen some certain amount of money. And by the time you hear that individual was a chartered accountant, that has already brought a discredit to the institute and the profession, and they'll be like, an accountant, a chartered accountant for that matter. So that's already like a slap on the face. Okay, let's continue. So there are cases where where a professional, a tax practitioner, should do when there is conflict of interest. When there is conflict of interest. A tax practitioner may be faced with conflict of interest when undertaking a professional activity. A conflict of interest creates a threat to objectivity and may create threats to the other fundamental principles. Conflict of interest. What can cause conflict of interest? Threats can cause conflict of interest. For instance, we have familiarity threats, okay? When a tax practitioner is exposed to familiarity threats, like Adesua and co-chartered accountants have been the tax consultants for Temitope Limited for over 7 years, okay, as a tax accountant. For 7 years, if I have been the tax consultant, to a reasonable extent, our relationship would have grown from only being professional to personal relationship, because year in, year out, I come in with my teams, go through the account, probably let's even say audits, not just only tax, audits, let's say audits, okay, and the end of the year, I'll not prepare tax computation, okay? So year in, year out, I come in, the relationship keeps what's increasing, because it grows beyond professional towards personal what relationship. So if I'm exposed to that, there may be conflict of interest while carrying out my responsibilities. But there are some cases. What should a tax practitioner do when he's faced with this conflict of interest? One, let's list these two. One, if the tax practitioner undertakes a professional activity that relates to a particular matter for two or more clients whose interests with respect to that matter are in what? Conflicts. Okay? Let's say, for instance, there could be any case scenario for a tax practitioner. These are just two highlighted. The interest of the tax practitioner with respect to a particular matter and the interest of a client for whom the tax practitioner undertakes a professional activity related to that matter in conflict. Let me just cite different examples. For a tax practitioner, okay, let's say, for instance, I'm the tax consultant for let me use company that. Okay, I'm a tax consultant for a minute. I want to companies that are competing, okay, in the same industry. Okay, Dangote Salt, we have Dangote Salt, we have MasterChef Salt. So as a tax consultant, I'm a tax consultant for Dangote, I'm a tax consultant for MasterChef Salt. Okay, these two companies, I'm specifically looking at. I know Dangote is into different products, but I'm just kind of looking at the salt aspect. Okay, this company, okay, these two companies, they are already competitors against each other. Okay, and there may be conflict, and if there are issues between these two companies, probably, in fact, it's already known to the general public that these companies are always having issues, because they are always trying to beat each other in the markets to ensure that their market share keeps increasing on a daily, on a yearly basis. I could be faced with some conflict of interest. One, if Dangote Salt get to find out that I'm the one auditing or carrying out professional activities for MasterChef, there may be conflict of interest, because they may believe I'm giving out information to any of the competing party. I hope you understand what I'm saying. Okay. Please don't forget, kindly send your questions, or if you don't understand any part, okay, I'll always attend to it as soon as I can. Then a tax practitioner, okay, when this conflicts comes up, what are you expected to do? The best way to resolve such conflicts, okay, you can have meetings with your clients, okay, probably the board of directors or the managers or those that you're expected to see that could handle the issues. So when you have issues that relate to conflict of interest as a tax practitioner, first and foremost, you should have a documentation when the meeting is being held. You should have a documentation. the issues that is being faced by the tax practitioner while carrying out his responsibilities to that client should be what highlighted. Then, other than that, any other discussions, if probably they get to arrive at what solutions to those issues, that should also be what highlighted and kept aside and documented. Okay, then if after the end of the discussion and a significant solution was not arrived at for such conflicts, the tax practitioner can then go ahead to reach out to a professional body. As a tax practitioner, you have ICANN there. ICANN is a body. You can always send your issues to them, and they will reply you with the best professional way to handle such conflicts, such issues. The same apply as a tax practitioner. If you have your CITN, you can also reach out to that body. So you can reach out to your professional body, let them be informed about the issues you have been faced with, and they'll give you the best way to carry out. In fact, even as a tax practitioner, this relates to a tax practitioner. As an accountant, if you are affected, if you are being exposed to conflict of interest, how do you handle it? You can reach out to a superior in the organization, or you can reach out to a senior colleague outside the organization if you do not want such to be discussed within your company. And if you are the only accountant in the company, you can also reach out to other professional colleagues. As an ACA, you can reach out to FCAs, those that you think will be able to advise you on how to carry out to resolve such conflicts in your organization. Okay, that exists between you and probably the company, or as the case may be. So there are multi-choice questions here. With all that we've discussed so far, we should be able to attend these questions easily because they are very simple. Okay, everything we've talked about, the answers to all these questions are in all that we've discussed so far. So let's just look at these questions briefly. So this is a sample of the multi-choice question that you'll be asked. You'll be asked 20 questions. So this is a sample of how the questions will come. So you have to pick the correct answer and attempt. So it says for the first question, it says, one of the following is not an example of the fundamental principles of ethics as specified by IASB. Okay, I want this to be participatory. So I think so these first multi-choice questions, we have 5 questions. So once I read it, please, each of you, those are in class now, okay, Osezwa, Ilori, and Temitope, I want you to send your solution. Okay, just send it to the chat group. Question 1, you can just write question 1 and write the letter, okay? So one of the following is not an example of the fundamental principles of ethics as specified by IASB, okay? A, relationship, B, integrity, C, confidentiality, D, professional behavior, E, objectivity. Please send your answer now. Number 2, it says the following are circumstances where a tax, or you can just write it down. If you have a notepad, write it down so that you know how well you understood this topic. The following are circumstances where a tax consultant may disclose information on a taxpayer, except, what are the circumstances? For him to disclose information on a taxpayer, 1, the disclosure is permitted by law. Yes, you can read through, okay. B, disclosure is at the discretion of the tax practitioner. C, disclosure is authorized by taxpayer. D, disclosure is required by law. E, there's a professional duty or right to disclose when not prohibited by law. Then we have number 3. It says a conflict of interest. Wow, this is what we just talked about, okay? May be created by one of the following situation. A tax practitioner. Okay, please ensure you always mute your mics, okay, so it doesn't distract the class. A conflict of interest may be created by one of the following situations. A tax practitioner undertakes a professional activity relating to separate and distinct service for 2 different clients. B, a tax practitioner undertakes a professional service for a group of a company as per his belief. C, a tax practitioner undertakes a professional for a new client, sorry. And then D, a tax practitioner undertakes a professional activity related to a particular matter for 2 or more clients whose interest with respect to that matter are in what conflict. Then we have open-ended questions. These kind of questions can come in your words, in your theory aspect. That's the section B. One, it says, explain the following fundamental principles of ethics as specified by IASB. Okay. And I had listed them. First of all, what are the fundamental principles? There are 5 in number: integrity, objectivity, confidentiality, professional behavior, professional competence, and due care. There are 5 in number. When we say integrity, what do we mean? It means that a professional accountant should be straightforward and should be honest in all his professional and business world dealings, business and professional relationship. Secondly, objectivity. When we say objectivity, an accountant should not be what's biased. An accountant should ensure that conflicts of interest do not affect the accountant in carrying out its expected duties or responsibilities in an organization or to a client. Okay. Then undue influence. The professional have to ensure that he's not influenced his decisions or judgments while carrying out reports or filing of returns, as the case may be. Is not influenced by others. It could be the board of directors, it could be the managing director, it could be the CEO, as the case may be. Okay, so we've looked at that. You can see why I said by the time we look at the questions, you would just know that we've answered the questions during the course of the explanation. Briefly describe the circumstances when a tax consultant may disclose information on a taxpayer. We've listed that already. Okay, disclosure by or permitted by law is already here in this option. Disclosure is permitted by law. Disclosure is at the discretion of the tax practitioner. Disclosure is authorized by the taxpayer. Disclosure is required by what? By law. Okay, these are the cases. Let's go to the next question. Okay, it says according to, the principle of confidentiality imposes an obligation on all professional accountants and expect them to refrain from, and it says, and it expects them to refrain from taking certain actions. From taking certain actions with respect to handling of confidential information or documents of their clients. So require, you said, briefly describe the obligation imposed on professional accountant. But for professional accountant, when it comes to confidentiality, if there is any issue, you should respond to an inquiry or investigation. Okay, you can write to the professional body, like I said. If you realize that the issues are already beyond your control, write to a professional body. In terms of you can inquiry, you want to know how you go about carrying out resolving this issue, so you can carry out your responsibility as what's required. And such body as ICANN, and we have CITM. Okay, then to protect the professional interests of a professional body, ensure you do not bring discredits to the professional body that you belong to. You do not bring discredits to the professional body you belong to. Sorry. Then explain what a tax practitioner should do when there's conflict of interest. I've explained that already. Okay, these 2 questions are interrelated. So let's go to the next topic. We'll be looking at National Tax Policy, NTP, National Tax Policy. So if you have any question relating to the first part, I have some chats. Let me look at our solutions. Okay, Hilary, wow, that's a good one. Age relationship, yes, okay. Please, if you have any questions, let me give 2 minutes. Just ask and I will attend to it immediately. in 2 minutes. So by 8:03, we'll continue with national tax policy. No question. Okay. Okay, let's look at national tax policy, NTP. Okay, thank you for your response so far. Okay, I'll send the solution. Okay, you can just ask me up. I'll send you the solution to the questions, to the other multi-choice questions, so you can go through. In fact, I expect you to get everything, especially if you started this class with us. Okay, excuse me. So let's look at national tax policy 2017. So the national tax policy was introduced to the syllabus recently also. So it's an aspect that you should please know. Do not ignore it. You can see it both in your multi-choice question and in theory aspects. So let's look at the objective of national tax policy. This is where we are at the moment. So it says national tax policy. What are the objectives? What are their fundamental words, guidelines? Okay, so this was set up to develop the Nigerian tax system. Okay, the national tax policy was set up to develop the Nigerian tax system, and this policy have guidelines. This body as a whole, they have guidelines that would lead them. But let's look at their specific objectivities. One, they are expected to guide the operation and review of the tax system. So from time to time, you're expected to review all the tax laws, okay, for those that needs to be changed based on, because some tax laws can be affected by economic changes, okay, can be affected by different, they say change is constant, okay, so laws like recently in 2020 when the new finance bill was introduced, okay, that tax system was reviewed. The tax law was reviewed previously from company income tax previously before February 2020. Okay, for company income tax, you're expected to pay 30% on company income tax, but beginning from February 2020, it was later changed. It was recently changed, okay, that when you're earning income from 25 million naira, you pay how much? Are we even aware of it? Hello? Are we aware of it? Okay. During your company income tax act, let me not confuse you. But even for VAT, which is the most common one, VAT was previously 5%, but now is 7.5%. I think we'll look at one calculation and let's class of company income tax. Well, I think it's important for you to know these reset changes because you can be asked in the objective part. Although if you are given a question to complete the company income tax, if the year is still before 2020, you are still expected to use the previous the company income tax rate and education tax rate, which is 30% and 2%. Okay, except you are given from February 2020 beyond. That's when this will be the new change will be implemented. So they are expected to guide the operation or the tax system, the operation of tax system in Nigeria generally. They're expected to guide them. Okay. Secondly, they're expected to provide the basis for future tax legislation and admission. Okay, not only thinking about tax legislation for today, also thinking about the future, serve as a point of reference to all stakeholders of taxation. So this policy, it's very easy for all stakeholders of taxation. Who are the stakeholders? We have the government, right? We have the taxpayers, all those that tax authority, they are all stakeholders in when it comes to taxation. So they can use these policies as their reference points. Then they also provide benchmark on which stakeholders shall be held accountable Okay, provide clarity on the roles and responsibilities of stakeholders in the tax system. So we'll get to see the responsibilities of the stakeholders. Okay, so what is the policy guideline? Excuse me, the guiding principles of the Nigerian tax system. All existing and future taxes are expected to align with the following fundamental features. So all taxes, both existing, both current and those in the future, must adhere to the following guidelines. Please, it's important for you to know these guidelines, just the way you already know your 5 fundamental principles of what? Ethics. Okay, very easy. Okay. Well, we have what? Equity and fairness. Nigerian tax system should be fair. All Nigerian tax system should be fair and should be adequate. It should be devoid of discrimination, because you already know Nigeria is a company that has different what? Ethnic groups. Okay, so they have to ensure that whichever tax system is being implemented do not cause what? Discrimination, not only between ethnic groups, okay, discrimination between the rich and the poor. Okay, so the tax systems are, when implemented, they are expected to ensure that they are what? They are devoid of discrimination between the poor, the rich, and the what? Average. Taxpayers should be required to pay according to their ability. That's the equity there. That's the fairness. According the justice, they are according to their what? Ability. Such other information as may be required by education tax or the proper administration of the what? That's the TET fund, tertiary education fund. So that's the TET, but we call it education tax. Okay, but that's the TET fund. So secondly is what? Simplicity. The Nigerian tax system should be simple. Certainty should be certain, and there should be clarity. It should be easy to what? Understand. Tax laws and administrative processes should be simple, clear, and easy to what? Understand by all. Even the poor should be able to what? Understand it easily. Then convenience. The time and manner for the fulfillment of tax obligation shall take into account the convenience of taxpayer and to avoid undue difficulties. Okay? It should be convenient. The time to pay the tax should be convenient by individuals. For instance, the taxes that are charged, like when you purchase an item, let's say for instance from ShopRite, some items that you're purchasing, VAT would have been added to it. So they've made it to such a way that for individuals, when you are charged VAT when you're purchasing items, the VAT are charged immediately. Okay, so that's convenient. That's quite easy, okay, to deduct, especially for the owners of those for those various for the shopping malls, for the organization, and so on and so forth. For companies, when they want to charge VAT, it's very easy. From the invoice, after calculating the total amount payable to that client, okay, you just charge VAT at 7.5% and send the invoice. Once they make the payment, you put that money aside. Okay, at the end of the month, by the time you do your VAT input and VAT output, whichever amount you arrive at, that's what you pay as VAT to relevant tax authority, which is FRS. It should be convenient. It should be easy. It should be simple. Low compliance costs. The cost of taxpayers complying to such tax laws should be easy. It should be less expensive. Sorry, the cost should be low. Okay, for instance, that's why tax offices or tax authorities, okay, I started to have offices in almost every big places that business organizations can easily access. For example, we have the State Internal Revenue Service. For example, in Lagos, the State Internal Revenue Service here is LRS. Okay, they have, let's say, for instance, Ketu is an environment. They could have more than 2 offices there. Okay, they have VI, Victoria Island, they have tax office 1, they have tax office 2, so that wherever you are on a monthly basis, if you want to pay VAT on behalf of the company, it's very easy for you to access. So the cost to comply to such tax system should be easy for the taxpayer, so that they will easily remit the relevant tax to tax authority. Then we have low cost of administration. Tax administration in Nigeria should be effective and efficient and cost effective in line with international best practices. That's on the part of the what tax the government, okay? The body in charge of tax. Their cost of administration should be low and efficient. They try to reduce costs, okay? Should be low and efficient, and the tax system should meet up with international best practices, okay? Most of these tax systems are operative. They can get information from different countries, put it together, and ensure that that tax law that is about to be implemented suits the current state of Nigeria, probably our economy, our currency, and so on and so forth. Okay, then flexibility. Taxation should be flexible and dynamic to a manner that does not retard economic activities. Should be easily flexible. Okay, for sustainability. The tax system should promote sustainable revenue, economic growth, and development. There should be a synergy between tax policies and other economic policies of the government. I don't want to go deeply into details, but I will say fairly that, in fact, I will say to be realistic, I have not really seen this get to play, especially in our recent day-to-day activity. One, there's a general pandemic in the country, not only in Nigeria, all around the world. Okay, the government is unable to give palliative to their citizens. They can't even get to contribute at least a little for individuals in the country to be able to meet up with their day-to-day needs, like having food to eat, having money to pay little bills, electricity bills, and other bills, and those that are actually needs. Okay, those are exactly, especially when they are to one, they are unable to meet up with all of this. And then at a time like this, you now start bringing up tax policies, that will also get to affect these citizens that will pay tax, as their majority are home, not doing anything. Some those that have been working, a certain percentage have been laid off, certain percentage of population have been laid off. Okay, business activities are not being carried out. Just very few industries are actually thriving during this pandemic. Okay, so with all these that are happening, you now decide to start bringing out tax policies. Your tax policy should also have a synergy with the economic policies of the world government. At a time like this, tenants are now expected to pay stamp duty, 6% of stamp duties. Okay, we have logistics during a time like this, because most people are indoors. Okay, logistics have actually thrived. As I say, some industry actually was thriving during this period. Okay, so they've been able to, people, even if they are inside businesses, they'll have to send their goods from one place to the other. So that industry has actually been booming during this period. And now, all for the government to come up with its policies that now NIPOS will be expected to charge. For instance, if it's within a state like Lagos State, if you are to move, you have to pay for license. To get your license is 2 million naira in a year. All of these are not realistic. Okay, they are not being fair. That's just the truth. They are not just being fair. They are not just being considerate. So I would say, in reality, if I'm to judge Nigerian tax system, especially with these new laws that have been implemented recently, they do not suit any of these, all of these principles, all these guidelines that has been listed here. Okay, but we are expected to know them, and these are the basis of which every tax system, every tax law should be based on. All right, so let's continue. Taxation as a tool for economic management and taxation as a tool for economic management and development. Okay, the tax system should support sustainable growth and development at all times. In this regard, tax system should be geared towards meeting the following goals. All tax systems should meet the following goals. One, wealth creation and employment. Is this happening currently? No, it is not happening. Even if it's happening in other countries, it is not happening in what? In Nigeria. One, wealth creation and employment. Tax systems are expected they should be designed to promote social, political, economic development, accordingly. Okay? Tax policy should promote employment, export, and local production. Like okay, for instance, for in one of the tax law we have what we call the pioneer legislation. Okay, that's the tax system. The government came about that pioneer legislation. You do that in your professional level, but let me just say a little about it in a minute. Okay, for pioneer legislation, what that tax law majorly focuses on is that there are some items that can be manufactured in Nigeria. And if these items are manufactured in Nigeria and a company is being established, for instance, okay, who was our last participant? Okay, Osezua. Okay, for instance, Osezua goes to Osezua opens a company and she starts producing cement. Okay, so what the law says is that for pioneer registration, you will be granted 3 years of tax holiday. For 3 years, you not pay company income tax. Your company will be operating as long as you meet up with the pioneer. Your company meets up to the pioneer status. Okay, so for 3 years, you will not pay company income tax. And then if the tax authority give you an extension, you have a minimum of 3 years, maximum of 5 years. For 5 years, tax holiday, you will not pay company income tax, but you keep paying your education tax. So for that period of year, all of this, the essence of that tax law is to bring about wealth creation and employment. Those that have the capital can easily go into such if you just go to FRS portal, you see a list of products that you produce that you will be granted pioneer registration for between 3 to 5 years. Okay, so the essence of these tax laws is to bring about wealth creation and employment. Okay, just to ensure that tax policies promote employment, export, and local production, especially in Nigeria. That's why even you notice that agriculture laws related, especially when it relates to the agriculture system in Nigeria, they try to increase local production. So the tax laws are a bit fair to those in the agricultural industry. Okay, so tax policies and laws should not be retroactive. Tax policies and laws should ensure equal investment opportunities and business for support for businesses, whether local or foreign. So irrespective of the nature, if the company is a foreign company or a local company, okay, they should ensure equal investment of opportunities. Taxation and diversification. There should be a concerted effort to attract investment in all sectors of the economy, with more focus on promoting investment in specific sectors as may be identified by government in the overall interest of the company. Okay, so from time to time, the essence of this is to ensure that they attract investment into different sectors of the economy. Okay, focus on indirect taxation. The tax system should focus more on indirect tax, which are there's supposed to be an arrow there, sorry about that, which are easier to collect and administer, are more difficult to evade. Okay, it's very difficult for them to avoid such tax. Conveyance of tax rates. Tax rates should be progressive and should be designed to promote equality. All tax laws should be designed to promote equality. Okay, I've mentioned that between the rich and the poor. Okay, the tax system should gradually seek convergence of the highest marginal rate of personal income tax, capital gains tax rates. That's the tax rate should be fair. They should promote equality, because every individual, every company gets to pay more than one form of tax. Okay, when you go and buy items from a shop, you are charged value added tax. If you are working in an organization, you'll be charged payee. Okay, that's already a form of tax, even without you having a company. So you are charged payee, you are charged what? Value added tax. Okay, if you are an individual, you do contract, you are registered as a business, okay, you are charged what? Withholding tax. So all of these are what different types of what tax laws, and different rates are being applied. It depends on the what tax law. Okay, special arrangements and other incentives. Special arrangements should be sector-based and not directed at entities or persons. Also, special arrangements such as free zones and other tax incentive or waivers should be arbitrarily terminated except as provided in the enabling. Okay, I even want to say something about this. When it comes to special arrangements or incentives, I will even say our tax authorities are not being even fair in terms of that. I know of a company then when I was in an audit firm, worked in an audit firm, a company, they produce mattress, foams, mattress, pillows, and so they manufacture it, so they have a big factory. Okay. And then the company has been, let's say the company has been in existence for about 10 years, and year in, year out, they submit their audited financial statements on time. They file their tax returns on time. In fact, they know that company in the FRS company of the state where that company resides, that this company do not joke with anything when that comes to what tax matters. They pay all they pay all their tax on time, as I told you. Then on a particular year, this company had an incident actually. I don't know, they had a fire incident in the factory, and most of their products, their raw materials were consumed. In fact, they had a lot of buildings that were damaged for a particular year. The owner of the organization could not carry out activities for about 6 months. So after then, because of insurance and all, he was able to start up something little. And then the following few months after, tax authority sent a letter to the company saying they had not paid for, there was an issue anyway in they said they were coming for tax audits. They were coming to the company to carry out tax audits. And then the tax consultant, who was my boss then, a partner of the company, when he saw the letter, he was so angry because he was like, this is a company that has been consistent, and you rarely see companies or you even see individuals that are consistent in paying tax, because they'll tell you that we pay tax to government and we do not see what they even do, because they're supposed to use those money to improve the economy, to provide social amenities and so on and so forth, but they are not doing that. And he was like, for this company that has been so consistent, this company should at least be granted tax holiday, even if it's for a year, for the owner of the organization to be able to recover and regain so that he can start production again. So you see part of the reason why I say most of these things are not being realistic. So let's continue. Creating a competitive edge. Okay. How does the tax system create a competitive edge? One, by reduction in the number of taxes. Taxes should be few in number, broad-based and high revenue yielding, because on the part of the tax authority, they will want to implement tax that will increase their revenue generation from citizens. Okay, excuse me. The administration of taxes should be simplified for ease of enforcement and compliance. Secondly, avoiding of multiple taxation. These are ways to create competitive edge by the tax system. Taxes similar to those being collected by a level of government should not be introduced by the same or another level of government. For example, we have tax that has been collected by FRS, Federal Inland Revenue Service. We have tax that has been collected by states. Okay, we have tax that is also being collected by local governments. So these are three different levels of government. Okay, so they have to ensure that the tax that has been collected by this level, that they are not the same. Each level, the federal, the state, the local government should ensure collaboration in harmonizing and eliminating multiple taxation. So the form of tax to be collected by each of these bodies, these levels of government or tax authority should be clearly stated, so they will not have conflicts between the levels of government. International and regional treaties. A wide network of international and regional treaties will be beneficial to the economy. Okay, like for double taxation, we have that. Okay, Nigeria have double taxation agreements with a lot of countries. We have double taxation agreement with China, with Switzerland, and so on and so forth. So what it means is that because Nigerian, we have citizens that reside in those countries, or they are carrying out business activities in those other countries. And we also have those citizens and individuals from those countries that are resident in it. For instance, Nigeria, we have some companies in Nigeria that are being owned by the Chinese. Okay, so what they encourage what the Nigeria tax system here is encouraging is that they should sign international and regional treaties. Okay, on ways to for instance, we have a company where the owner is a Chinese and his workers are also Chinese. They need to be an agreement, so a double taxation will not be experienced between these individuals. They will also be charged they will also be charged tax in their country. The employees of the company, if they are non-Nigerians, they'll be charged tax. So they need to reach out an agreement on the rates that will be charged on a certain part of their income here in Nigeria, and the rate that will be charged on a certain part of their income in their countries of rest of in their countries, the countries where they are citizens, not countries of residence, because their country of residence may be Nigeria. Okay. Then let's look at the stakeholders. What are the responsibilities of the stakeholders? Okay, we have different stakeholders. One, we have the taxpayers. What are the responsibilities of the taxpayer? Okay, first and foremost, stakeholders in Nigeria. Let's look at the government. The government is expected to implement. The government is expected to implement. The government is expected to implement and regularly review tax policies and law. That's their responsibility. Provide information on all revenue collected on a quarterly basis. All revenue collected by this state government are expected to be reported on a quarterly basis every 3 months. Ensure adequate funding, administrative and operational autonomy of tax authority. Then taxpayer, what's the responsibility of the taxpayer? The taxpayer is entitled to one, relevant information for the discharge of tax obligation. So the taxpayer should be well informed in carrying out. Taxpayer should be informed in carrying out his tax obligation, receive prompt, cautious, and professional assistance in dealing with tax authority, raise objections to decisions and assessment, and receive response within a reasonable time. Pay an impartial appeal. Okay, revenue agencies. Okay, a fair and impartial appeal. For revenue agencies, one, they should treat the taxpayer as a customer. They should ensure efficient implementation of tax policies, laws, and international treaties. They should also facilitate inter-agency cooperation and exchange of information. Another stakeholder, professional bodies, tax practitioners, consultants, and agents. What are they expected to do? They should act. They are expected to act. Okay. They should act in accordance with professional codes of conduct and ethics. They should not aid and abet tax evasion and corrupt practices. That's as professional bodies, example, ICANN, CITN, okay? Then for the media and advocacy group, they should promote tax education. That's why you get to see adverts for the media. They advertise on, for instance, once it's at the beginning of the year, from January, FRS will start advertising that all companies that their accounting year falls between, the accounting years period falls between January to December, 31st December of every year. They should start planning to submit their audited financial statement and file their returns before June the following year, which is 6 months after. Okay. So what they do, what the media do is just to create awareness to the taxpayers, so all and other stakeholders of tax system. Articulate, protect, and advance taxpayers' rights, advance accountability and transparency in the what? In the utilization of tax, where we have the state and the local government. The tax authorities at all these levels, they're expected to administer their mandate in accordance to the following. Okay, sorry about that. I think the gen will come on shortly. Okay. So let me continue. For registration of taxable persons, all taxable persons are expected to be registered and issued taxpayer identification number. In fact, recently FRS announced that all individuals, all persons are expected to have tax identification number, especially when you're above the age of 18. So tax authorities should leverage on the database of the CBN, for BVN. That's why the tax authority have access to the BVNs of companies and individuals, National Identity Management Commission, NIMC, Nigerian Communication, these are all federal, excuse me, these are all federal bodies, National Immigration Service, NIS, and other relevant sources, The current uncoordinated registration by different agencies should be harmonized. Like I mentioned before, that the 3 tiers of government should ensure that they have their various tax to be received by the 3 different levels should be clearly stated, so they will not have conflicts. Then secondly is tax compliance. Government should apply available resources and tools at their disposal to ensure that taxpayers voluntarily comply. If the tax laws are easy to adhere to, for instance, it's convenient it's very easy to understand, on the part, especially when it has to do with self-assessment, on the part of the individual or the taxpayer, they can easily assess their self, after assessing their self, is it easy for them to also pay? Is the payment process easy? Yes, if the payment process is easy, then it will be also very easy for them to comply with, all right? Then the third is record keeping. Tax authority should partner with the relevant agency to set up automated system and automated system and train tax officials, so that they can easily maintain the tax system. Exchange of information. Tax authority should ensure that there is efficient framework for cooperating and sharing of information. Enforcement of tax laws. Tax authority should ensure that tax laws are easily enforced. How can they do that? They will also bring out civil and criminal sanctions, penalties. If these tax laws are not being obeyed, are there penalties? Yes. Tax laws usually have penalties. So this will also bring about tax compliance on the part of the taxpayer. So we have multi-choice questions. Let me see how many there are. Okay, we have 5 multi-choice questions. Then we'll look at the open-end question. So once again, I would like you to share your answer, while we read through the questions, One of the following is not the objective of the Nigerian tax policy. A, guide the operations and review of the tax system. They said not. So we'll have further that adhere to the objective of the Nigerian tax policy. Advice on the tax collectible by the various styles of government. Provide the basis for the future tax legislation and taxation and administration. Serve as a point for future tax legislation and administration. Provide benchmark on which stakeholders shall be held accountable. Which is the answer? I think Oseza is still with us. I'm waiting for you to send the answer to the chat group. All future taxes are expected to align with the following fundamental principles, except we just looked at this: equity and fairness, right? Simplicity, sanctity and clarity, convenience, extraordinary, low compliance costs. So which is not expected to be there? Please, I'm waiting for your response. So question number 1, question number 2. Okay, question number 3. It says the goals that the tax system must achieve to support sustainable growth and development at all times include the following. And development at all times include the following: wealth creation and employment, quality education, taxation and diversification, focus on indirect tax, convergence of tax rates. I can clearly see the answer. Osezo, I'm waiting for your response. Please send your attempted solution to the chat group. Okay, just go to chat and send in your solution. Then for number 4, one of the following is not a primary responsibility of government as a key stakeholder in ensuring an orderly and sustainable development of the Nigerian tax system. A, receive prompt, courteous, and professional assistance in dealing with tax authority. B, implement and regularly review tax policies and tax and laws. C, provide information on all revenue collected on a quarterly basis. On a quarterly basis. D, ensure adequate funding, administrative and operational autonomy of tax authority. Okay, so please, I expect you to attempt question 1 to 5, okay? Then 5, it says one of the following is not a primary responsibility. You can also write it down on your notes. One of the following is not a primary responsibility of the revenue agencies in ensuring an orderly and sustainable development of the Nigerian tax system. So A, ensure efficient implementation of tax policies, laws, and international treaties. B, treat the taxpayer as a customer. C, facilitate inter-agency cooperation and exchange of information. I just talked about this now, okay? Then D says self-representation or by any agent of choice, provided an agent acting for financial reward shall be an accredited tax practitioner. Then E, undertake timely audits and investigation. So these are the 5 questions. Please send your attempts to me. Even your open-ended question, please. You can just probably today or tomorrow, just take out time and send it. In fact, once you haven't going through the explanations we've done so far, all your answers are there, except there are areas you do not understand. Then I'm always open to attend to all your questions. All right. So we have open-ended questions. It says 1, the national tax policy. Okay. The national tax policy recommended certain fundamental features for all existing and future taxes as expected to align with. It says required, explain 5 of the recommended principles of NTP. What are the recommended principles of NTP? National tax policy. 1, we have equity and fairness, which was the first one. Secondly, we have simplicity, certainty, and clarity. We have convenience, low compliance cost, low administration cost. Okay, all of these are the 5. Yes, low administration cost. Yes, those are they said we should just explain 5 what fits. So, but they're actually more than 5. We also have flexibility. So this from the 5 fundamental principles of NTP. Just the way you have 5 fundamental principles of what ethics. Please, at the end of the class, you should easily say this. All right, not just say it, know it. Not only for the purpose of passing, but for the purpose of having the knowledge, so you can you can use it over and over again. Okay. The NTP recommended, question 2, it said the national tax policy recommended that the tax system should support sustainable growth and development at all times. To achieve this, therefore, the tax system should be geared towards meeting certain goals. Required, explain the 3 goals recommended by NTP, which will enable a taxpayer to support sustainable growth. So they say, how many should we list? 3 of the goals. Let's go back to our material. What are the goals? What says now? Okay, I await the goals. We have wealth creation. Okay, look at it. For economic management and development. First, we have wealth creation and employment. They asked us to mention 3, but there are more than 3. Okay, we have taxation and diversification. We have focus on indirects. We have focus on, okay, we have focus on indirect. Please, while you're attempting this open-ended question, that's your theory part. If they say explain, don't just go ahead to start explaining, okay? You can start, what do you understand by, okay, the first question was by fundamental principles, okay? Nigeria tax policy 2017, okay, have some guiding principles. Have principles that guide the what Nigerian tax systems, okay? That's, you should have at least an introduction, okay? Just looking at ways for you to get your full marks, all right? Then you can now go ahead to say that the principles includes the following. They've only asked you to what? Highlight 5. 1, you mentioned them, equity and fairness, all right? 2, simplicity, sanctity, okay? You write, itemize the 5. By the time you're through with itemizing, 1, then you start explaining. You write the explanation of the first one, write the explanation of the second one, write the explanation of the third one, fourth, and fifth. That's how you're expected to attempt this part of the question, okay? So that's why I had everything just written for you before the question. So by the time you look at the questions, you just know how you can easily what, all the informations you need are already in the what, in notes given to you. All right. So let's continue. You're in question 3 now. Question 3, explain the responsibilities of the following key stakeholders of the national tax policies. What's the responsibility of government, taxpayers, and revenue agency? The responsibility of government, we have said that government are expected to what? Implement and regularly review tax policies, okay, and laws. Government are expected to what? Government are expected to provide information on all revenue collected on a quarterly basis. Then they should also ensure adequate funding, administrative and operational autonomy of the tax authorities. For the taxpayers, we've discussed these responsibilities, okay? For the taxpayers, they should ensure that they provide relevant information for the discharge of their tax obligation. While they are discharging their tax obligation, all necessary information needed by the tax authority should be provided. They should also provide prompts and professional assistance while dealing with tax authorities. Then if there are objections to any of the assessments given to them by the relevant tax authorities, they have the right to receive the response, to send a response within this stipulated time according to the law. It depends on the part of the type of the tax law that is what's being involved. Then for taxpayer, they should be fair and impartial. When they have appeals, their appeal should be fair and impartial. That's already stated there. Then for revenue agencies, they should treat taxpayers as customers. They should not only see them as individuals that are mandated. They should not see taxpayers only as individuals that have been mandated to remit the necessary tax to government, or to remit the necessary tax to government through the tax authorities, but they should treat them as customers. You know, as private companies, when you have customers, you treat them well. Oh, probably if you have those that clients that have been with you for a long period of time, you want to compensate them on a quarterly basis or at the end of the year basis. Treat them. You know, government will not do that. But we expect them to treat them well. How do they treat them well? The manner at which they respond to taxpayers. When they go to tax authorities, how do you respond to them? Do you treat them well? Sorry, the tax authority treats them well, not you. Okay. So they are expected, revenue agencies, they should treat taxpayers as customers. This also ensure efficient implementation of tax policies. The tax policies that has been put in place by the tax system, they should ensure that they are easily implemented by the taxpayers, okay? Then they should facilitate interagency cooperation and exchange of information. As they have different agencies that are working with tax authority, for instance, all these government bodies that remit tax to tax authority, they should what facilitate exchange what information on a regular basis. If they have issues, they should also what share their issues with tax authorities so they can find ways to what to resolve them. So we have a third question. That's that about question 3. Question 4, sorry, fourth question. Tax authority in Nigeria cuts across 3 tiers of government. The Nigerian tax policy document establishes clear guidelines on crucial tax administration. 4, it says explain the 3 of the administrative issues highlighted in tax policy document. Wow. Please, I think we'll stop here for today. Okay. Though I'm unable to finish the questions, but we'll attend to the last question, the last topic. The last topic is on returns assessment. Okay, the last policy is on return. Sorry, the last topic. Sorry about that. Is on returns, assessments, and collection period. So we'll begin with that in our next class. Please just go through this material again and attempt all these questions by yourself without looking at the solutions, so that you know that you understand. These topics will be among those that you've understood so far. All right, so we'll continue with this in our next class. All right, you can also read ahead of the class. Thank you very much. Thank you for spending your evening with us. Okay, so we'll meet again next week by God's grace. I'm Adesua. Have a lovely night's rest. Bye.